Okay, it's been a minute. Hey guys, welcome back to the YouTube channel here at TrinFx. And firstly, I'd like to apologize to you guys for not posting any weekly analysis video and not having our London session live stream. Reason being, I have been dealing with some situations, personal stuff, nothing major, just picking up a new subject area of which I'm studying, and some other things that I do have going on currently. So it's a lot on my table right now, and I just have to, you know, I'm only human, so there's a point where you really have to question, okay, there's certain things that you can and cannot do. And at the point of time, those wasn't something I could have done. But I am committed to you guys. I just want you guys to know that I am going to be starting to be more proactive when it comes to setting everything in order so that you guys could also get time to actually, come on here. And, those that do appreciate seeing the live streams as well as the weekly analysis videos and everything, to you guys, I like to apologize, and I'm going to dedicate to being more proactive when it comes to that. That being said, better late than never. So we're going to jump right into it. And currently, what I want to do, as obvious, during the weekly analysis, is look at the fundamentals. And something that we had happening today that really caused a big drastic move on the DXY. Okay, and we're going to discuss as to the reasoning as to why that happened, or at least to sum up how we could rationalize that movement and what we could expect in the future. All right. So first thing first, what I like to take a look at, always starting with the fundamentals. And for those that be saying, you're focusing on the fundamentals, you should focus on trading rather than focus on fundamentals. To you, I say, shut up. You're the one sitting here, not profitable, watching videos of other people. Take your time. But yeah, no, guys. So fundamentals, and I like to always reiterate this and like say it, is something that you should pay attention to. Fundamentals move markets. All right, you're dealing with economies. This isn't stocks. This isn't binary options, anything like that. You're trading on 1 minute chart. Anything. You're trading currencies, and you're dealing with large economies. All right, so fundamentals do act as a catalyst with these economies, and they do elicit some sort of response from the markets. Okay, so it's always good to pay attention as to what major impactful news are coming out, so that you can stay ahead of, what price action movements you may see or may in the future happen. Okay, so with the fundamentals, as you can see on Tuesday, right, on Monday, we already had a set of things that happened already. One of the main things that happened here today is Jolt's job opening numbers. You can see that we had a consensus, right, being 9.4 jobs, right, million. And you can see that drastic drop. The actual actually came out at 8.8 million. All right. So that is a very huge number. And you can see we'll actually focus as to why that is, right? But you can see this is currently what we have here, right? This was the actual, and it's worse than the consensus on the previous combined together. So coming up Wednesday, we also have some pretty high impactful news, but something like I always like to say as well, these are dealing with individual economies within the Euro Union. So I really don't pay too much attention to that unless it's something about the whole entire Euro area, right? So something like this, the economic sentiment, you can see here, if you just hover over this, you can see it says Euro area, right? This focuses on the Euro area, the European Union. All right. So that's just all the countries under the European Union come together, and they have these numbers here. So economic sentiment overall, we're looking to see a consensus lesser than the previous. That's the only thing that I'll really pay attention to see what markets do. We also have for the USD, ADP employment change, right? So ADP employment change, this is also going to be a huge mover for the US dollar. Now, take that with a grain of salt, guys, because we already had a huge movement already for the dollar. So at this point, we're looking at key reflection turning points, right? Whether this number comes out better than the consensus, we will see a very large push on price, right? And it will be sort of like a not over drastic, but it will be like an exaggerated move to the upside in favor of the US dollar, just because of the recent fall that we did have, right? So we have consumer confidence in the dollar basically dwindling down with the job opening numbers that came out. And any other news that we do get, if it's positive for the US dollar, markets are going to take that and just run with it. And this is something just that falls under market psychology. You'll see it time and time again. It really does happen. And we'll see whether that's the sort of movement we do get. Maybe price might just consolidate or range until NFP. Okay, we also have GDP growth to pay attention to. So expecting slight bullishness here. The consensus from the previous, just an increase of 0.4%. And we have pending home sales, not really something I pay attention to. GDP growth is more so something that I would say have much of a movement on price. All right. Besides that, we have retail sales for the Japanese economy. So I'm going to just mark that. And the Thursday and Friday is where we have a lot of news events. So you can see starting here on Thursday, we have retail sales for the CHF, right? That being the Swiss franc. So we're expecting a decrease here on that. So we'll see how that actually pans out. We also have the euro area again, right? This is what we really need to be focusing on. CPI numbers expected to come out slightly bullish on the previous. That's the consensus. Now, the euro area itself has been pretty lagging behind when it comes to the European Union, and also a lot of this actually it deals with the relationship that China does have with a lot of these economies. So with risk sentiment being sort of dissuaded, that is because of China and their overall economic growth numbers dwindling. And China is a commodity economy, right? They do a lot of exporting and whatnot. So the relationship that they do have with Australia, for example, all right, when we are experiencing some sort of bearishness or some bearish tone, heavily bearish tone with the Chinese economy, that could affect the Aussie dollar as well. And we usually see risk aversions and stuff like that when we do have anything dealing with the yuan, right? But for the European Union, right, the euro area, we have inflation expecting slightly negative numbers, right? Inflation looking to come down, which is in general is positive. Okay, overall is positive, but they view it as negative as what it means from a response from the central bank. We also have the CPI numbers expecting a slight increase, so a mixture of data here. So slight increase on CPI numbers. However, we're looking for inflation to come down overall, core inflation numbers, and also, well, we have the inflationary rate, which is something that we really need to pay too much attention to. All right. After that, we do have jobless claims. And I'm now looking at the time difference as to when we do have these news releases coming out. So we have jobless claims and we have PCE price index, right? So this is something that we also need to pay attention to, and personal income and personal spending. This also, with the job numbers that we do have currently, would actually affect price, and we may actually get a pretty drastic move for the dollar, right? If it does come out positive, then that's great. Dollar recovery of that bearish move that we had, and I'll show you guys that in a moment. Just now, and we're going to see a drastic recovery. All right, just almost a whole of the move just recovered. But if it does come out bearish, again, we have to wait for the numbers to actually come out. If it does come out bearish, lesser than what the consensus is here, or as the previous, then we're going to see either a drastic movement continuation to the downside on price for the dollar, or we're going to see just a range in motion. All right. On Friday, everybody's favorite day, the beginning of a new month, we have NFP. NFP, I'm not gonna trade NFP. I've learned from my mistakes. I've learned from my past. Trading NFP never plays out good. It's unnecessary. All right, we had a pretty great week thus far in the VIP and in the free for TrinFx community members in the Discord and Telegram services. So all this unnecessary. No, Friday, forget that. But we have unemployment rate, so something that we need to pay attention to. Looking to be about the same. Now, with the job numbers that we did have, we could expect this rate to rise, guys. All right. We also have, well, NFP looking to see a decrease here, right? That's what the consensus is stating, and we may very well get that. We also have GDP growth for the Canadian dollar. And something I've said in the last weekly analysis that we took a look at, I'm just waiting to see the divergence between the US dollar and the USD. All right, especially for some of these pairs, we really have been seeing both moving in tandem with each other. Now, quick look, DXY. drastic move to the downside. We did get to profit off of this move to the upside here. This little swing, we were able to net some profit with NZD CAD. Short term right? We were able to catch a move on that, and I'll just show you guys here. Let's see. I believe it was in the free signals here too. Alright, I just had to scroll up here. Alright, so yeah, NZD CAD, this was a sell. We got in right at that area. I wasn't expecting to hold it long term because we did have the jobs numbers coming out. And as you can see, these are some voice notes just explaining the movement, the reasoning for entry, as well as, you know, just risk management here. Right, so you broke even, took some profits, 30 minutes candle, long as bearish candle, right? Some wick back bullshit might happen. Usually more than likely it does happen, especially when we do have major news coming up. And it's like an unspoken USD rule, so right? So we just manage risk, to be safe side with the volume continuation, we might get a pullback. And so down, price pushed down, we were able to get some profit off of that, the movement downwards. And then you can see now where price is currently at, taking a look at NZD CAD. Wow. All that way up, all that movement up. So yeah, we were fortunate enough to just manage our risk, be a little bit smarter than the markets at this point in time, and we were able to come up with a profit. Now, back to the DXY. Right, we saw price reapproach that area of resistance, and then we had this sharp fall down. Now again, this is off of news with the job numbers coming out lower than expected, right? Lacking a whole 1 million something. Now, the reason as to why job numbers matter is really because it matters as the consumer, right? From a consumer perspective. Now, the Fed itself is they're very stern, and they're very clear about their stance on inflation, and they want to bring inflation back down. Now, the thing is, and this is just something that I gathered from doing this business management and course that I'm doing. When it comes to inflation, all right, businesses having stable inflation is great for businesses, because it allows them to set wages as to what they will pay their employees, as well as prices for the goods or services they are providing, whether it's something that's external or something that's direct. Price fluctuations would matter to a company or businesses and stuff like that. So with that being said, with the Fed being very forefront of to what they want to do when it comes to inflation, getting inflation back into a very stable level, all right, all this instability that we do currently have, added with the job numbers that we did have coming out, sorry, it all shows a bearish tone for the US economy. All right, and that's what market took here and ran with, and why we saw this very strong bearish movement to the downside on the dollar right now. Now, albeit that this could be very well be an exaggerated move, but with the numbers that did come out, I would say it's proportional enough, right? Nobody is expecting numbers to be that bad. Now, with this movement, what does that mean for the dollar in the future? Are we supposed to be dollar bearish now? Is it just, okay, it went down, gonna have a correction because it's over exaggerated? What that means, that's what you may be asking yourself right now. That's maybe what you're trying to get out of me. Now, for the time being, looking at the daily and the forwarding, and I just wanted to look at the technical aspect of it right now. We did approach this significant resistance area, and we're seeing a rather usual response, right? It's a usual response that you get at any resistance. So, albeit that this is more on the fundamental side of things. Now, continuations, whether this is going to continue downwards or not, again, this is going to play on the other economic factors that we do have coming out, such as the jobless claim numbers, looking at the ADP employment change numbers, and as well as NFP. Now, the job numbers are setting the tone for all those other numbers to come out, but taking a look from it at a technical perspective, right? One thing I like to note is, okay, large strong move to the downside from this resistance zone. One area that we're looking to see price probably bounce off here is this area right here, right? At 103, let's say 140, right? So this is a pretty significant supportive area. So we want to see what price does at this point, whether we're going to get a bounce away from this zone, going back upwards, or we're going to get a break to the downside. Now, on the technical aspect, if we get a break to the downside, dollar bearishness continues. All right. Dollar bear is winning right now. How that translates into what we could use in terms of the fundamentals or what we should look out for, right? Just scrolling back up here. So we are currently on Wednesday, right? So Wednesday, what we have, ADP employment change, expecting bad numbers. So with this, the bad numbers that we are expecting, lower than the previous, then I do think overall we could see a continuation with that DXY bearishness. US dollar toes just being really bad at this point of time, right? We also could take a look at GDP growth. If GDP growth does come out as expected or lesser, let's say we come out at 2% and not the consensus, that's going to continue seeing some dollar bearishness, right? So all of this is just going to add to the dollar bearishness. And I think taking that into consideration, if we are able to catch that dollar bearishness at this point, then we don't really need to worry about anything else, because right now at that point we're basically in a free fall afterwards, right? This would be one target level here. Price could possibly come in here and we see some buyers try to step in, but overall we could see price continue moving downwards in the near future. Now this is applying a technical and fundamental aspect to it, and yeah, this is why fundamentals is like essential, I would say. So hopefully that makes sense to you guys. Taking a look at some other stuff that we do have. So again, risk sentiment was kind of off, but as we did have the US dollar bearishness, we saw a lot of these other currency tones shift, and we're now applying the technical aspects of trading price action towards the charts more than the fundamentals of those other assets, such as AUD, NZD in my case. Now, for me, what I've been paying attention to more so is the price action movement, right? So you can see that I do have one line here, one line here, right? Representing these two areas price reached into, rejected from, right? Let me just label that, right? And the price came down back into this zone. So we are currently basically in a zone right now. I'm waiting for a break to the downside that price could possibly do. I am out of this trade right now, but this was essentially what I was waiting for. Price to continue moving down, get a break to the downside, and boom, this would have been a 7.7% winner. Now, again, we do have different things we need to focus on. For the Euro, Euro Thursday, right? We have these Euro area numbers that we need to pay attention to and what that could lead potentially for the price action here. I am looking for my overall sell continuations and some risk assets, basically gathering in strength for the time being. All right. So right now, this is it for me. This is all I'm looking at. This is just a quick recap as to what we have happening in the charts. Obviously, I'm not going to dive in on too much of the pairs that I'm looking at because I've really toned down what I'm looking at currently just because of these different catalysts acting up in the price action, right? So at this point, you just need to take a step back, have some patience, and wait for these things to blow over and give you like clearer directions as to where price is going to go, what kind of behavior we could expect, those sort of things. All right, so guys, thank you so much for joining me here, taking a little bit of your time to listen to the ramblings of a trader, right? And yeah, if this video was helpful or beneficial to you, then please feel free to leave a like as well as comment some of the things that you're watching, right? What are you watching? What are your expectations coming for NFP? What are you expecting for the US dollar continuing? Are we going to see bearish continuations until NFP? Or are we going to see some sort of shift? Asian session arrives. What's up? What's on you guys' mind? All right. So that's it for now, guys. Hopefully you gained something out of this, and I hope everybody's having a great trading week thus far. All right. Thank you. Peace.